Manish Sonthalia, Senior Fund Manager with Motilal Oswal Asset Management, joins us live from his Mumbai office with his take on how things could shape up for Indian markets in the medium and in the short term. Manish, as of now, the consensus on the street is that PSU banks are likely to underperform. PSU banks have got NPA concerns. They are also experiencing the brunt of the economic slowdown. But because of the fresh round of capital infusion, do you think there is some scope for PSU banks in the short to medium term?
It could very well be the case, Nikunj, partly because the capital infusion, to the best of my knowledge, is not going to happen at below book value. So, even yesterday's announcements about State Bank of India, State Bank of India is still at book value. But I think the other smaller banks which have got capital infusion, it will happen at higher prices. So unnecessary dilution might not happen. Markets are pricing in more than the worst, so the market knows that the NPA cycle is not going to be over till about next September. And they are pricing the banks, the PSU banks, in that light. However, I think there is value in some of the PSU banks, particularly those where asset quality concerns are not so severe. They could be looked into.
Manish, the basic underlying thesis which is fueling momentum is the assumption that tapering will get delayed. Do you think till the time we will not get a timeline or a calendar on when US Fed will start tapering, this market is in more like a green zone and dip buyers are likely to dominate this market?
Even the market will be in a green zone, but tapering and all those things have already been discounted. So right now it is a pre-state election rally. And 8th of December, when the state election results come out, that is going to be the crucial date. If you have the BJP winning 3 states or more, you see the Nifty running up maybe up to 7,000 odd levels. If the BJP happens to win less than 3 states, you will be back to Nifty trading anywhere between 5,000 and 5,500. So I think between now and 8th December, the market should remain in the green, and that, indications are all there that they are not falling in a big way. So, I think that is how the markets are positioned currently.
Manish, we've got a big event come next week as well, another credit policy, and it seems like it's a 25 bips repo hike. Has the market already begun to price that in though?
Yeah, more or less, because the difference or the difference between the MSF rate and the repo rate window is basically now 150 basis point, and RBI governor has indicated that this will be brought down to 100 basis points. So inflation is very sticky, so in all probability, markets have already discounted a 25 basis point hike in repo, so as to bring down the difference between the MSF rate and the repo rate window to something like 125 basis point. If you were to not get any repo rate hike, that would be in fact quite positive from the market's point of view.
Manish, you just mentioned that you have a constructive outlook for banks now, but that outlook is not across the board. You are selectively bullish on private PSU banks. So what do you like within the PSU banking basket?
So we have something like the Jammu and Kashmir Bank, we have State Bank of India. These are 2 banks which we like. We are also working with PNB and BOB. I think these are the 4 banks which are there on our radar as far as the PSU banks space is concerned.
One better off giving HDFC Bank, Axis Bank, ING Bank, Yes Bank a skip for the moment, because the risk-reward ratio now is more favorable to buy into PSU banks. They are trading at historical lows, and the difference between private banks and PSU banks is at a historic high.
No, I wouldn't put it that way. I think the banking, if the markets have to move up from these levels and, between, let's say, 8th of December to March, if the markets were to move up to 7,000, the Bank Nifty has to contribute, so the banking pack as a whole should tend to outperform the broader markets going forward. That is what I feel. So within that space, you will have both the PSUs and the private sector banks move up. And we have already seen a bit of the rally come in the private sector banks. So from 800, you're seeing Axis Bank at 1200. Or for that matter, an ICICI Bank which moves up from 800 odd levels to 1000 odd levels. So I think it will be a combination of both the public sector and the private sector banks. But the fact is that public sector banks have not really moved, whereas the private sector banks have moved. So from that point of view, I think there could be some leg up or catch up which the PSU banks will do in the overall up move in the banking Nifty.
Manish, some impressive numbers coming in this quarter from both Bajaj Auto as well as Hero Honda yesterday. Anything that you like?
Yeah, so I think Bajaj Auto and Hero reported good set of numbers, and the management commentary which has come out yesterday from Hero seemed to suggest that the company is taking all proactive measures to bring down the costs going into the second half of this year. They're very comfortable about volumes, being 12 lakhs in the 2 months of October and November. So volumes are going to be quite strong. I think there is some scope of upgrade in earnings moving into FY15 as well, and currently the valuations at 15 times near year valuations will actually move to or roll over to 15 times next year earnings. So from that point of view, I think Hero is more better placed than Bajaj, which is more of an export story. Or around 40-45% of their revenues coming on account of exports, which is doing quite well. But in Hero, you have a rural push, and rural India is doing well. All the numbers seem to suggest on that count, whether it be Asian Paints, whether it be Imami yesterday, or whether it be Hero MotoCorp. So I think there is some decent upside in Hero even from these levels. That is what I feel.
What's the sense that you're getting about cement though? Because it's been an extremely poor show this quarter. Is it now time to buy these stocks on dips? Because most of the companies did undertake a price hike last quarter, and that seems to be the trajectory going forward as well. Or do you think, there's further weakness in stock?
I think it's more of a hope trade currently, because supply-demand dynamics don't seem to suggest that there is any pricing power that is there within the industry if you leave out the cartelization aspect of it. But I think cement can only do well post-elections. Till then it remains a hope trade. Numbers are pretty bad. There is hope that volumes are going to pick up. This year we are looking at closer to around 5% volume growth for the industry as a whole. Costs are actually moving up. That is having an implication on margins. So valuations are not that cheap as far as the decent names are concerned. So I would rather wait and watch for the cement pack to be bought into currently. I mean, I would be more comfortable looking at the volume uptake before I take that call.
Manish, Glaxo Consumer, Imami, Max, these are some of your core mid-cap holdings. Have you changed your core mid-cap holdings?
Even we have added some tech exposure. We bought into Tech Mahindra recently. So I think the tech story is getting better and better. But within that space, I think the top 3 or 4 names look set to move higher based on industry dynamics, based on management commentary, etc. So that is the only change that we have made.
After a 70-80% appreciation in Tech Mahindra, you still expect the stock is poised to go higher?
Yeah, because the valuations are still at around 12.5-13 times current year earnings. So, at 35,000 crore market cap and 2,700-2,800 crore profits for this year. And volumes expected to be closer to around 13-14% in US dollar terms for the next 2-3 years. So their strategy is working out well, and I think we have done our due diligence. Let's see how the thing plays out.
Manish, what explains the sudden spurt in Unilever stocks, and not just us but across the globe yesterday?
Yeah, so there was some buzz that Indonesia unit of Unilever is set to get delisted, and that had a rub-off impact on HUL in our markets as well. But I really don't think that Hindustan Unilever has such a strong case in India, because they are feeling the heat of because of the categories in which they are in, the volume growth, margins, the growth in profits is not going to be that spectacular as you see in other mid-cap FMCG companies. So I really try to avoid Hindustan Unilever currently.
What is it that you like then from the FMCG basket?
So it is the same usual names, the Glaxo Consumers, the Imamis, the Godrejes of the world, Within the large cap, I think Nestle continues to be on a strong wicket. ITC continues to do well. But would like to avoid Marico because raw material prices are moving up. Copra prices are in fact up 20%. or something like a HUL, which is exorbitantly priced, and one more name which could be looked into and really a strong story going forward could be a United Spirits. So we're working on that as well.
Well, you're calling HUL expensive. Nestle is not cheap either. I think it is one of the most expensive FMCG stock in Asia. It is trading at 35-40 times based on FY15 estimates.
Yeah, but the categories are different, Nikunj. Here you have a soap and detergent as your personal products as a main category, and here you have food as a main category. So if you take a 5 to 10 year view, Nestle being into the food category has much more potential and scope in terms of value added packaged food segments rather than HUL. So it's not about the present valuations, about the growth opportunity, the growth aspects of both these companies if you take into account a 5-year, 7-year view.
So give me a broader construction of your portfolio. Are you happy to own defensive and expensive stocks, or now you are realigning your portfolio for the next economic cycle?
No. I mean, I'm not playing that trade at all. The rotation trade is led for some better times. So a bulk of our portfolio is into consumption, export theme. Telecom cannot be bought into the mid-cap portfolio, but that is due to market cap constraints. But telecom is definitely one of the areas where, I would like to take some exposure. And financials. I think financials are going to lead here on. So if there is a case, we have been underweight. I have been underweight on financials for some time now. But I think rejigging a bit of the portfolio, some more allocation to an IT, maybe some more allocation to a banking, reduce some exposure, not that you get rid of the names, but maybe some tinkering down of exposure in the consumer related names to give way to increase in exposure in banking and IT names.
Manish, you've identified a handful of mid-cap stocks in last 3 years. iShares is a prominent one, Emami is the other one, Glaxo Consumer is the other one. So give me a high conviction idea where you're convinced of a 50 to 60% appreciation, let's say next 2 years.
United Spirits could be one, Nikunj, and Tech Mahindra could be another.
50% because both these stocks are already up 60-70%.
I mean, United Spirits it could be 100% from these levels if you take into account 3-4 year point of view.
You're in some mood today, aren't you?
Not really, I'm a teetotaler,
Okay, really appreciate your time and thank you for joining us. That was Manish Sonthalia of Motilal Oswal AMC.